Hello, good evening, everyone, and welcome to today's session for our tax series. Today, we will be discussing tax compliances, assessments, and appeals. We have Ali Hamza with us today. He has been presenting on tax computations in the previous series. So I'll just welcome Ali Hamza to formally introduce himself again. Uh, Okay, Ali, you can take the mic and tell us about yourself.
Thank you, Varun. Hello, everyone. This is Ali Hamza, working as a senior tax manager in EY Pakistan since like 8 to 10 years. And previously, I have delivered tax computations and the laws and practical situations applicable in Pakistan. And now we have, as part of our series, come up to a topic wherein we will be discussing about the tax compliances, assessments, and appeals under different tax laws. So, as part of this particular presentation, we have divided our presentation to three major topics, which are compliances, assessments of different tax laws, and appeals. This normally very relevant, and when you are practicing the tax as a profession or as a tax practitioner, these areas are very important to have a knowledge about, because these topics would get you the idea how tax machinery and tax system works in Pakistan. Starting with the income tax compliances, the basic and primary compliance requirement under the income tax law is filing of income tax return. So in Pakistan, the income tax return is required to be filed electronically on the prescribed portal of the tax authority. You have to punch figures of your return, of your computation of your taxable income and tax liability on a online software available of the tax authority. And after completing all the annexures and annexing required documents, you can file the return electronically on the portal. For corporate taxpayers, while filing the annual income tax return electronically, you also have to annex the audited financials along with the return, because the tax authorities would in future would be assessing your return in consonance or in light with the audited financials you relevant to the tax year. So now the important question is who is required to file the income tax return. So under the income tax law, every corporate taxpayer is required to file the income tax return on annual basis. Other than the corporate taxpayers, every person, which include individuals and AOPs who have taxable income of more than prescribed threshold, which is 400,000 PKR, is required to file the income tax return. And any non-profit organizations are also required to file the income tax return. As the last bullet of this page, uh, 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 we firstly would want to highlight that there are different streams of income taxable in Pakistan. Some incomes are subject to normal tax regime, taxable at the full rate of tax, whereas certain regimes are taxed on a lower rates, normally called or understood as final tax regime. So if any person is earning final tax income, then such person would also be required to file the income tax return. The pertinent example would be the dividend income. So if any taxpayer is earning dividend income which is subject to final taxation, would also be required to file the income tax return. So coming to the next pointers regarding who are required to file the return. So any person who have certain immovable property, owning certain immovable property or certain assets would automatically be required to file the income tax return regardless of its threshold of its taxable income. For example, if someone holds immovable property having the area of 500 square yard, such person would be required to file the income tax return. And similarly, if someone owns a vehicle having capacity of 1000 cc or above, would be required to file the income tax return. As far as last bullet of this page is concerned, these are very specific to certain taxpayers who are holder of certain electricity connections which are industrial, commercial, and where the electricity bills exceed 5 lakhs rupees. Then such taxpayers would also be required to file the return only by virtue of this. Among other requirements which trigger the requirement to file the income tax return, there are also certain membership associations which trigger the requirement to file the return. For example, and in Pakistan, there are different chambers, including industry chambers and congress. If a person is a resident and part of such or member of such bodies, would be required to file the return. And similarly, there are certain statements along with return needs to be filed. If such statement is required, then only by virtue of that, this resident person would be required to file the return. So here is the list of certain persons who are specifically prescribed not required to file the return, which includes widows, non-resident persons, disabled persons, and orphans below the age of 25 years. These persons would not be required to file the return only by virtue of owning any immovable property. For example, if a non-resident person only owns a land in Pakistan and do not have any Pakistan source income, such non-resident person would not be required to file the return. These exceptions have certain specifically been provided in the local tax law. So in addition to filing of income tax return, there are other statements which needs to be filed by certain taxpayers. Generally, there are three broader categories of taxpayers in Pakistan, which includes companies, partnerships, and individuals. The filing of wealth statement is required only on individual taxpayers, wherein the individual taxpayer is required to file the wealth statement along with the return by giving complete particulars and details of total assets and liabilities of such taxpayers, and including the any assets held in the name of its spouse or dependent children is also needs to be incorporated in such statement. This statement should also be reconciled with the net inflows or net outflows for the year. Further, this statement is only required to be filed by the resident individual taxpayers, though tax commissioner may specifically ask non-resident taxpayer to file such statement, but that would be not voluntarily submission, rather it would be on the requirement by the tax commissioner. As previously stated that in addition to return, there is the requirement to file the wealth statement as well as certain foreign income and asset statement. This statement is only required to be filed where a resident taxpayer, which is individuals, and also on assets having value of more than USD 100,000. So, for example, if a person is resident of Pakistan and have certain properties located outside Pakistan, and property and value of such property is more than USD 100,000, then such taxpayer would be required to file this specific statement. Similarly, the requirement to file this statement would also be needed where a resident taxpayer earns more than USD $10,000 from a country outside Pakistan. So the question arises how to file the return. It is very simple and it has to be filled in, as per the prescribed formats. No one has to come up with its own format or have its own calculation. Rather, the tax authorities for yearly basis on every annual basis prescribe a specific format to file any return statement or foreign statement, and generally these are filed on online portal. So this is a very systematic way to file the return, and no one has to come up with this own individual format. As far timelines are concerned to file such income tax return, there are two type of tax years generally applicable in Pakistan. The statutory year end is 30th June, and if taxpayer have opted for such 30th June tax year, then the due date of filing of return would be the coming December. However, if a taxpayer has opted for a special tax year which is ended on December, then the taxpayer would be required to file the return by coming September. In addition to filing of income tax return, there are other compliances a taxpayer should cater, which includes quarterly payment of advance taxes. So every taxpayer is to pay the advance tax and have to reconcile it with its annual tax liability. As far as timelines of quarterly payment of advance tax is concerned, the for September quarter, it has to be paid by 25th of September and so on. For June quarter, the date would be 15th of June. In addition to making quarterly payments, the taxpayer are also required to file an semi-annual and annual estimate of its annual tax liability. So in addition to filing of income tax return and other statements, there are other compliance requirements prescribed under the law, wherein every taxpayer has to file the withholding uh, statement if it is prescribed person. The list of prescribed person is voluminous, and for the better presentation, the same has not been included in this page. But that generally includes all companies, individuals, and EOPs who have turnover more than 100 million. These are the basic examples to become a withholding agent. So, if someone categorizes as a withholding agent, he has to make sure that while making payment against purchase of goods, services, or contracts and any other payment, whether there is any withholding requirement or not. If there is any withholding requirement, then such withholding agent is required to withhold income tax while making payment against purchases and deposited the same into the government treasury. And once such withholding obligation has been fulfilled, the particulars of withholding transaction is to be reported by filing certain statements. Basically, the withholding agents are required to file the quarterly statement that becomes fourth statement in a year. And in addition to that, such withholding agents are also required to file an annual statement, which is mostly the compilation of these quarterly statements. In such statements, the withholding agent has to prescribe certain particulars of its vendors, including their names, NTNs, and nature of transaction, the gross amount deducted, and net payment. This statement is not restricted only for vendors, but also for employees as well. So with every employer, while making payment of salaries, is required to file the withholding statement and also required to deduct tax and deposit into the government treasury. And in case even if there is no purchases in a particular quarter, and due to the fact that there is no purchases in any specific quarter, sorry, or there is not any expense on account of salary, even then such withholding agent would be required to file the withholding statement as a nil statement. Recently, the budgetary amendments have introduced a new requirement to also file a reconciliation statement between the expenses and additions shown in audit financial statements and the payments shown in the withholding statements. Though the format of such reconciliation statement is yet to be prescribed by the FBR, but it is anticipated that this would be a global reconciliation between the expenses and addition in fixed assets shown in audited financial statement and the amounts shown in the withholding statement. Mostly the reconciling factors would include the exempt salaries or exempt payments to the vendors below taxable limit payments, exempt payments by virtue of any operation of provision of law, or certain vendors have exemption certificates issued by the zonal or tax commissioner. Coming to the timelines of filing the withholding statements, since it is a quarterly activity, so after end of every quarter, the withholding agent would be required to file such quarterly statement by 20 days following the end of the quarter. For example, for March quarter, the withholding statement would be required to be filed by 20th of April. An annual statement would require to be filed by within 30 days from the end of the relevant tax year. For example, if someone have a tax year ending on 30th June, then the such annual statement would require to be filed by 30th July. So in addition to making compliances as prescribed by the tax law, the tax commissioner or tax authority, you can say, can also initiate the tax audits, income tax audits, to verify the correctness of the taxable income as disclosed in income tax return and the tax liability thereon. For that purposes, the tax commissioner can seek a record which includes the basic ledgers, trial balances, bank statements, and any record which constitute as books of accounts of the taxpayer, so that he can verify the underlying basis to file the return. Even if a taxpayer maintains its record in electronic form, for example, uh, in nowadays, mostly the taxpayers are operating certain ERP systems to maintain its books of accounts. The tax commissioner, and due to this law, can have access to such accounting software. But practically, the tax commissioner requires the documents in a hard form, but we also have experienced to share such information in soft form and access as well. So these are other basic level compliances a taxpayer needs to follow. Whenever a taxpayer is required to file the income tax return, he would concurrently would be required to register as for if a taxpayer hasn't been registered by virtue of filing of its income tax return, the tax authorities may compulsory or forcefully get such taxpayer registered and allot a temporary national tax number to it. In addition to that, every taxpayer who have obtained its national tax number has to display the NTN certificate at its business premises. For example, if taxpayer have different premises, for example, in a retail sector, there could be multiple shops or multiple premises of businesses. Then such taxpayer would be required to display such NTN certificate on every premises of the business. And recently, the tax law also have prescribed to obtain certain license from the FBR. The basic concept and underlying intention to obtain such license is that a document would display that this particular taxpayer engages in different or in a particular scheme or in a particular business. So the underlying purpose of this license is just to show that a taxpayer is involved, for example, in a manufacturing or, for example, in any service sector. Coming to the next topic of today's presentation is default surcharge. So the taxpayers is required to file the income tax return as per the timelines discussed above, and while filing the income tax return and while paying the advance income tax, they have to follow certain timelines. However, if a taxpayer fails to pay or file the return within the timeline, as per tax law, the false charge can be levied on such taxpayer, which would be 12% per annum from the day of default to the date on which such default is mitigated. For advance tax payments, there is a special rule that a taxpayer is required to pay at least 90% of its annual tax liability during a tax year. If a taxpayer fails to pay such percentage of its annual tax liability during a year, then in such case, the false charge can be levied on the taxpayer. So we would be taking questions from the attendees after the prayers break. So if someone has question regarding compliances, he or she can hold his questions after prayers break. So coming to the major topic of this presentation, which is assessments under Pakistani law. Normally, the filing of income tax return becomes deemed assessment as issued by the tax commissioner. So, if someone file its income tax return, it is to be considered as the order issued by the tax commissioner. So this depicts that in Pakistan there is a self-assessment scheme wherein you have to because taxpayer have to ensure that every income has been incorporated in the income tax return and tax liability has been computed properly. So if someone files its income tax return, such return becomes the deeming order issued by the tax commissioner. However, if someone required to file the return but fails to furnish the return, then the tax commissioner is empowered to estimate its income based on the previous history and compute tax thereon. However, such best judgment can be made within 5 years from the end of the relevant tax year. Though the filing of return would become a deemed order issued by the tax commissioner, however, the tax commissioner is empowered to amend such assessment if he feels that such return has not been filed correctly or certain income has not been offered for income tax. However, the statute of limitation for such amendment in assessment is 5 years from the end of the financial years in which the return has been filed. This generally constitute as 6 years because the time starts running from the end of the financial year in which the return has been filed, which is generally 30th of June. If tax commissioner amends the deeming assessment, he can further amend the deemed assessment as many times as he feels to reach at the correct assessment of a taxpayer. However, again, the statute of limitation of such act would be 5 years from the end of the financial year in which the original return was filed. So this is also important to highlight that when a tax commissioner can amend or increase the tax liability of a taxpayer. So whenever a tax commissioner feels that a certain income has escaped the chargeability of income tax or income has been underassessed or offered for tax at lower rate of tax, then commissioner can amend and increase the tax liability and demand the additional income tax. In addition to that, if tax commissioner gets hand on any definite information received from any third party or received from any other authority of Pakistan or or from any audit, then the tax commissioner can also amend the relevant assessment. So, in addition to amending or further amending the original return, the commissioner can also revise any action or any order passed by the officer below the rank of the commissioner by taking suo motu action. So, chief commissioner, which is senior to the commissioner, can also revise any action of its subordinate officers, but the power to revise to revision by the chief commissioner is limited to the exemption certificates issued by the commissioner. As far as rectification is concerned, the tax authorities as well as taxpayers can rectify apparent mistakes on the return or order or any record submitted to the tax authorities. In previous slides, we have discussed the assessments of income tax, whereas we will be discussing the assessment of sales tax in this slide. As part of our previous series, the previous panelists, would have also explained the basic concepts of sales tax and VAT applicable in Pakistan, and we will be discussing only assessments of the sales tax here. So, the basic concepts of sales tax include the output tax and input tax, and the net liability paid have to be paid by the supplier or service provider. So, if tax authority feels that the output tax has not been charged properly, or output tax has been paid on the lower side, or input tax which was not visible or not adjustable, then tax authorities can initiate amendment in assessment proceedings to increase the liability of the service provider or the supplier of the goods. Further, in addition to assessing the output tax and input taxes of the sales tax, under the sales tax law, the service provider and supplier of the goods are also required to withhold sales tax on certain purchase transactions. And if the tax commissioner feels that such withholding responsibility has not been discharged properly, the withholding assessment or further amendment can also be initiated by the tax authorities. In this slide, we just have highlighted the relevant sections, or you can say relevant provisions of different laws applicable in Pakistan with respect to the sales tax, which deals with the assessments of sales tax or amendment in assessment. So, coming to the topic which includes appeals, although there are different tax laws applicable in Pakistan ranging from FED, income tax, sales tax, but the basic appellate mechanism is same in all the laws. If if a taxpayer is not satisfied with any action of the tax commissioner, or if the taxpayer feels that the assessment made by the tax commissioner has not been properly made, he can present its case to the first appellate stage, which is commissioner appeal, by filing the grounds of appeal. The commissioner please normally takes 6 months to announce its order. So after if still commissioner if taxpayer do not get satisfied even from the commissioner appeals order, he can further appeal before appellate tribunal of inland revenue, which is the last fact-finding forum as far as appellate hierarchy of Pakistan tax is concerned. So if tax department or tax authorities is not satisfied by the decision of ATIR, or taxpayer is not satisfied by the decision of ATIR, they can file a reference application to the High Court. So there are five high courts in Pakistan, and the case with the relevant jurisdictional case would be presented to the relevant court. For example, if a court of if ATIR is situated in Lahore and the case related to the Punjab, then the Punjab High Court would be referred to. And similarly, if the parties do not feel comfortable with the decision of High Court, they can refer the case to the Supreme Court. Um, the timelines to file such appeals are, if tax authority has passed original order, then the appeal before commissioner appeal can be made within 30 days. And if appeal has to be made to ATIR, Appellate Tribunal Inland Avenue, then it has to be made within 90 days from the order of the commissioner appeal. And if the reference application has to be filed before High Court, then it has to be made within 90 days from the order of the Appellate Tribunal Inland Avenue. In addition to this appellate hierarchy, there is also a mechanism provided to alternatively resolve the disputes, wherein a committee has been formed by different members of Federal Board of Revenue. There should also be included a member from a chamber and the taxpayer. This committee can resolve certain litigations mutually before going to the courts. So, Farooq, this topic entails the major points of this topic has been dispersed and communicated to the attendees. Due to the fact that this topic involves practical aspects, and there is nothing much to be presented to the attendees, we can simply jump to the questions, or we can wait for the prayers break. So we will join again at 7:10 of Pakistan time to take up your questions. Hello everyone. Hope every most of the attendees will be back from the prayers break. So we can continue by taking the questions from attendees. Feroz, can you help me? Though I mostly have answered the questions written by the attendees, but if there are any missed questions or any specific questions, I will be pleased to answer those.
Answered most of the questions, but
Feroz, we can't hear you.
sorry, Ali. Can you hear me now?
Yes, I can hear you.
Okay, so most of the questions were answered by Adil, but I'll check if there are any left. So we have Ali Aziz. Ali Aziz wants to know what are the forms to be filled in the salaried individuals for tax filing on the site online.
Thank you, Feroz, for the question. So, salary individuals are mostly required to show their salary income while filing the its income tax return. However, such salary individual may be earning other types of incomes as well. For example, they may have some profit on debt, interest income, or some rental income. So, in addition to showing the sales salaries income, also have to show such type of incomes as well. There is no individual forms available for any individual incomes. Rather, there is a combined form which is called income tax return, wherein every type of income has to be shown.
Shall we take the next one?
Yes, sure, sure.
Okay, Amar Khadim wants to know there were some conditions to file withholding statement. Every person file withholding statement, but here in handout, every person is required to submit it.
Yeah, understood the question. So, not every person is not required to file the withholding statement. Only withholding agents are required to file the withholding statement, as also mentioned in the handout. So the withholding agent generally constitute as corporate taxpayers. Certain individuals and AOPs have the threshold have turnover more than 100 million and persons registered for sales tax. So the answer to this question is every taxpayer is not required to file the withholding statement. Only the withholding agents are required to file the withholding statement.
I think that is it for now because most of the questions were answered by Adil. Guys, if there is any question that you want Ali Raza, sorry, to answer, kindly type in right now.
I have read a question, the last one by Umair Ijaz, that what would be our comments of proposed salary tax increase. So we don't know about such proposal. any amendment expected to be made in coming June. So we do not have visibility on any such increase in salary taxation. And obviously, if there is any, it would be publicized in coming months, like in June or in May. Yeah, IMF may have set certain conditions on certain sectors, but we do not have any visibility increase of any salary taxation, which different taxation has been increased on the instructions on the proposal of IMF, but not do not have any visibility on the increase in salary tax. Feroz, is there any additional questions, or should we sign off for now, and we'll join in next session in coming days?
I think that is it for today. You can take the further questions if there are any for the next session.
But if there's any additional questions emerges, then we will surely be pleased to respond in coming session.
Sure, but I think there is one statement from Javeria. Is there any mechanism or mutual fund for federal and provincial boards?
Unfortunately, there is not. Though on that side, provincial boards and federal board settles their receivable payables on national levels, but on transaction level basis, there is no mechanism of any mutual fund. If a certain law is governed by a federal board, then federal authority, which is FBR, would be collecting the taxes and so on. And accordingly, in the same case, if a law is governed by a provincial authority, then such provincial authority would be the collecting agent on behalf of the government to collect tax. There is no mechanism of mutual funds or mutual adjustment on transaction level basis.
Thank you so much, Ali, for your time and for your valuable input into our taxation sessions. I think all the questions have been answered, raised by the participants, and we can call off this session for the complaints, assessments, and appeals. Thank you so much, Ali. Thank you so much, Adil, for your contribution in answering the questions. We will be meeting again with you guys on next session, which will be on cross-border taxation. Until then, have a good day, have a good week, and bye bye. Thank you so much.
Thank you. Thank you. Bye.